Why are they not hiking rates right now? Well, because they're afraid. They don't want to. They don't want to do it politically. They'll sink Biden's chances, which are already slipping away from being reelected. He's already, the most unpopular president up for reelection. Rate hikes would make him even less popular or more unpopular. And it's not just politics, it's what would happen to the financial system. What would happen to the banks? I mean, we already know what happened to some banks. They started to fail. That's why the Fed stopped hiking. It wasn't because inflation was coming down, it's because the banks were coming down. So they had to stop the bleeding. So they stopped the rate hikes and they started dangling the carrots of rate cuts out there to try to prop up the markets.
According to recent data, the Nasdaq is hitting record highs, while the Fed dangles the prospect of rate cuts to prop up the markets. But Peter Schiff warns that this is a dangerous game. He argues that the Fed's reluctance to hike rates isn't just about managing inflation. It's about political maneuvering and preventing another banking crisis. Schiff claims the Fed is too afraid of sinking Biden's re-election chances and collapsing the financial system to take the necessary steps. Instead of hiking rates to combat rising commodity prices and inflation, the Fed's inaction could spell disaster for the U.S. economy.
The spin on Wall Street that these minutes were hawkish because the Fed is acknowledging that inflation is higher than they thought it was going to be. Well, they have to say that. They can't ignore that inflation is higher than they thought it was going to be because they would look ridiculous not to acknowledge the obvious. But if you actually read what is in those minutes, this doesn't matter because the Fed is still convinced that rates are sufficiently high to reduce inflation back down to 2%. And so the fact that inflation is taking longer to get to 2%, that hasn't changed their belief that it's going to get there eventually. So they're undeterred by what they've seen. Doesn't matter that it's going to take a little longer, it's still going to work. They haven't even questioned or brought up the possibility that rates are too low, that just maybe they're not restrictive enough, or they're not even restrictive at all, which is more likely. Now, one of the things that they did say or was revealed by these minutes is they said that they were prepared to raise rates if the economic data supported that. But that's not true either, because the economic data already supports that. You see, they're saying if the data changes, if something happens and we get new data that shows that higher rates would be appropriate, well, then we'll raise rates. But only if we get future data that reveals that higher rates are appropriate. Well, that's BS because the data that we've got right now, they don't need any data in the future. The data that they're looking at right now shows that interest rates need to go up. The fact that they're ignoring that data and they're not only not hiking rates, but they're still talking about when they're going to cut rates, that proves that they're never going to hike rates. Because if they were going to hike rates, they would be hiking it right now. Why are they not hiking rates right now? Well, because they're afraid. They don't want to. They don't want to do it politically. They'll sink Biden's chances, which are already slipping away from being reelected. He's already, the most unpopular president up for reelection. Rate hikes would make him even less popular or more unpopular. And it's not just politics. It's what would happen to the financial system. What would happen to the banks? I mean, we already know what happened to some banks. They started to fail. That's why the Fed stopped hiking. It wasn't because inflation was coming down. It's because the banks were coming down. So they had to stop the bleeding. So they stopped the rate hikes and they started dangling the carrots of rate cuts out there to try to prop up the markets. Stock market made new highs. In fact, the Nasdaq set new highs and it's going to jump again tomorrow. NVIDIA came out, with better than expected earnings, which happens every time they report. The stock is now over $1,000 a share. It's up about 5%. And they announced a 10-for-1 split which of course is insignificant in reality, but in a bubble, right? That's good news because now it's not $1,000 a share, it's $100 a share. So let's buy it because it's cheap. When it's not cheap, there's just more shares outstanding. You've just taken the same pie and you've cut it into smaller slices, but somehow that works. That generates even more demand. So we've got record highs in the Nasdaq. The Dow has flirted with 40,000. It's gotten above it a couple times. It hasn't closed there. But the main reason that we're talking about record highs in the Dow or made record highs in the Nasdaq was because the Fed stopped hiking rates. But not just because it stopped hiking, but because it promised to start cutting. And so as far as the market is concerned, it's not a question of if the Fed will cut. It's a question of how soon are they going to cut. Now, the gold traders, the minute they sense that the how soon is going to be later, well, they're trained to sell gold and sell silver. And that's what they did today based on these minutes. But the people who are doing the selling don't even understand why the people who are doing the buying are buying. And the fact that gold is going up. It's not going to stop. Look at other commodities. Look at coffee. Look at cocoa. Look at sugar. Look at orange juice. I mean, everything is going up, right? Copper hit a new all-time high. Copper has pulled back a bit. But all these prices are going up, and they're going to keep going up. Oil has taken a breather, probably because of whatever we're selling out of the Strategic Petroleum Reserve. But that's not going to last. We're going to see surging commodity prices. This is obviously an indication of inflation. It's not that these soaring commodity prices are going to cause inflation. It's their rise is being caused by inflation. They're going up because of inflation. And if inflation was really coming back down to 2%, prices would not be going up. In fact, one of the things that was written in the FOMC minutes about inflation, which again proves that the Fed doesn't understand inflation or they're lying. They mentioned that maybe, just maybe, if we had enough new productivity, that the economy could grow faster without causing inflation, which is a ridiculous statement to make because the statement assumes that economic growth causes inflation, that if the economy just grows too fast, well, we end up with inflation. But maybe if we have some extra productivity, we can grow faster without causing inflation.
In this next discussion, Peter Schiff exposes a crucial misunderstanding about economic growth and inflation. Despite government claims, real economic growth should lower prices, not raise them. Schiff highlights historical data showing that during America's most productive era, the Industrial Revolution, prices fell as the economy boomed. He argues that today's inflation isn't a result of strong economic growth, but rather flawed policies and propaganda. Schiff insists that true growth means producing more goods and services, raising our standard of living while reducing prices.
Well, no matter how fast an economy grows, it will never cause inflation. If it's legitimate economic growth, in fact, the faster an economy grows, the more prices go down. That's what economic growth does. That's why it's a good thing. It lowers prices. Real economic growth means the economy is producing more stuff, right? That's the economic growth. We get more goods and more services out of the economy, right? Because that's what a growing economy is supposed to deliver, a higher standard of living. What determines our standard of living? It's the stuff that we can buy, the stuff that we can afford. But first, it has to be produced. So the more goods and services an economy can generate, the higher our collective standard of living. So that's how an economy grows. It produces more stuff, goods and services to the people who are living in that economy. So how could economic growth make prices go up? How can a big increase in the supply of goods and services make those goods and services more expensive? It's not. It's going to make them less expensive. It's going to make them cheaper. The more the economy grows, the lower prices are. That's what happened in the 19th century. I've mentioned it on the podcast many times, but it's worth repeating. Look at the consumer price index in 1900. It's half of what it was in 1800. 100 years of falling prices. In fact, if you want to know the most productive time period in U.S. history where we had the most economic growth, it was the Industrial Revolution. It was after the Civil War was over and before the First World War started. During that time period, that's when America had the fastest growing economy in its history. And not only did we have the fastest economic growth, we absorbed millions and millions of immigrants, including all four of my grandparents came during the latter part of that time period. And prices fell the whole time. So we had the most economic growth ever, and prices fell. And so if all the economic growth back then didn't cause inflation, why would growth, a fraction of that, cause it now? It won't, and it doesn't. It's a lie. But again, it's part of the government's propaganda attempt to blame inflation on the private sector, to shift the blame away from itself and say, hey, the reason we have inflation is because the economy is so strong. You see, we have this booming economy, and well, now we have inflation. And so it's a good thing that we have inflation because we have a strong economy, and it's just an unfortunate trade-off. We have a strong economy, and so we got to put up with this inflation.
Here's a quick recap. Peter Schiff criticized the Fed for acknowledging high inflation, but still believing current rates will reduce it. He argues they ignore data showing rates need to rise, avoiding hikes for political reasons, and financial stability fears. Schiff also debunked the myth that economic growth causes inflation, saying true growth lowers prices by increasing supply. Thanks again for tuning in. Make sure to subscribe, like, and comment below. Stay informed and see you next time.